Timeframes in trading refers to the duration of time covered by a single bar or candlestick on the chart. Each timeframe represents a different scale of time, ranging from very short intervals to longer periods. There are plenty of timeframes that got their names for a period they work. For example, 1 minute chart, 5 minutes chart, 15 minutes chart, hourly chart, 4 hours chart, daily chart, and even weekly and monthly charts. Traders choose timeframes based on their trading style, risk tolerance, and the time they can dedicate to the trading itself. Shorter timeframes are typically used for scalping strategies, while longer timeframes are more suitable for swing trading or position trading, which means traders hold their positions for an extended period of time, typically from several weeks to months or even years. You may and will analyze chart from a multi-time frame. This approach will give you a comprehensive understanding of the overall trend of an asset. To sum up, there is a great variety of timeframes that depict price trends during a specific time. Let's get to the chart. Here it is hourly time frame. It means each candle to complete needs a whole hour. And this specific hourly chart that we can see continues for around a month, as you can see down here at time scale. Of course, we can move chart to the right and see past market movements. If we switch to daily chart, we can see market movements of the whole year and more. As you can see, during those, market was climbing with some side moves or reversals. Take a look at these last two candles. And now switch to the 5 minutes time frame. As you can see, now there are many candles. However, we can see at this moment only past few days movements. So it is pretty much what was happening in those few days. Ups and downs, with some pretty good range to be honest. There are a lot of information in smaller time frame which was hidden in bigger time frame. That is why it's so important to look at smaller time frame as well as bigger, because different time frames bears different information, and we need to get as much information as we can for our trading decisions. In basic terms, that is what the day trader is doing, catching those short time periods to benefit from them. Day traders tend to take short time approach, which most choosing time frames lasting from 5 minutes to an hour. The benefit of being day trader is that you can choose from a range of different time frames, depending on the liquidity of your chosen market, the amount of time you have to make your trades, and your preferred trading strategy. In day trading, everything about daily time frame is irrelevant and not usable, so forget about weekly or monthly charts. Those can be used for some investment analysis, but not for trading. First and most important time frame is daily. The whole asset analysis and first impression of what's happening, trend identification, and etc. comes from daily chart. Then goes 4-hour chart, which is also very important and relevant for day trading. Hourly chart, this already could be used for some entry identification, but for swing traders mostly. And the day trading is one of the most important charts which helps to identify a lot of trading opportunities. Another useful chart for day trading would be 15 minutes time frame chart. This one already useful for entry points identification. However, it is still large scale for day trading. To be honest, for my personal view or approach, not so used. But remember, if you will find fit for your view, it's completely fine. In trading, you have to find what fits for you. Next time frame to speak about is 5 minutes time frame. It is most useful time frame and the one on which you should focus at the beginning as well, because you are going to look for trading opportunities in that time frame. Last time frame used for day trading is 1 minute time frame, also widely useful between day traders. Some traders even like to customize and uses 2 minutes or 3 minutes time frames for their entries. But at the beginning, I recommend not to improvise and use 1 minute or 5 minutes time frame. When there is a low volatility and seems nothing is happening, you still can find some entries in 1 minute time frame. But with appropriate expectations, of course. To recap, in trading is used these time frames: daily, 4 hours, hourly, 15 minutes, 5 minutes, and 1 minute time frames. I repeat myself, that in trading most important time frame is daily. Everything starts from there, so make sure to know that and keep in mind. Multiple time frames and setup of them. Multiple time frame analysis involves looking at particular asset across the several different periods of time simultaneously, in order to find best possible trading opportunities. Most traders will start by choosing one longer time frame and another shorter time frame. The longer time frame can be used to establish a trend, while the shorter time frame can be used to identify ideal entry points into the market. A third, medium-term time frame can then be added in to allow a more granular analysis of a market trends. Multiple time frame analysis techniques can help to manage several trading positions at one time, without increasing your risk. Indicators can also be used to aid with trading strategy. If we are going to look for some candlestick patterns in small time frame, there might be many negative trades, because smaller time frames tends to produce false signals. To avoid that, we need to use quite a few time frames at once, by choosing daily chart as a main chart, 4 hours, hourly, or 15 minutes time frames as a confirmation chart, and 5 minutes or 1 minute time frame as a trading chart, in which you are going to search for an entry into the market. So to make any given trade, first we make analysis at the daily time frame, then hourly, having our expectations and knowing what to expect. After, we are looking for a specific pattern or signal, entry point so to speak, in smaller time frame. And only if we receive some kind of confirmation from a bigger time frame, we make a trade. It is just for references, to give you a general idea why we are using multiple time frames. It is not trading strategy just yet. There are multiple ways of how you can set up your trading screen. And for that, you still don't need a few trading screens. But if you have, it's even better. You can set up your trading chart the way you can see right now. On the upper left side, it is a daily chart as a main chart. At the upper right side, it is an hourly chart as a confirmation chart. And below, it is our 5 minutes tradable chart. Or you can set up like this. At one screen is a daily and hourly charts, and in another screen, it is our tradable 5 minutes time frame. Basically, you can set up whatever way is better and more comfortable for you. Find your own way. It is very important to make your trading platform comfortable as much as you can. Just remember that you need to monitor all these time frames easily in order to get best entries. Thanks so much for watching, and if you found this video helpful or interesting, please give it a thumbs up. It really helps the channel to grow. And if you'd like to see more content like this, make sure to subscribe and hit the notification bell so you don't miss any future videos. I would also love to hear your thoughts or questions in the comment below. Thanks again, and I'll see you in the next video.